For more on Alphabet's results, let's bring in Fast Money friend Gene Munster. Gene, your take on the quarter. The stock is down 8.8% right now after hours.
Melissa, I don't know if Deirdre covered this in her kind of recap from the call, but they did say that there are two headwinds related to FX and the loss of 1 day of leap year. It's going to have a negative impact on the March quarter. But they also said, and this was what really caught my attention, is that the cloud segment is going to have variability. That was the comment, variability quarter to quarter based on when capacity becomes available. It all makes total sense. But when you play it into investors hyper-focused on the near term, what it means for the March quarter in terms of Google Cloud growth, the street's at about 30%. When you talk about variability, it probably means that the numbers should be closer to 27%. So I just want to highlight the stock is really trading on one data point, which we need to start there and just acknowledge, of course, that this is all about Google Cloud. But I think that is largely missing the point. The search business saw a fractional acceleration in growth. They've rolled out from 300 million customers that saw AI overviews to over 1 billion. Remember, that's the big negative here is generative AI and Perplexity going to take away? We're not seeing that yet, but I think that is an impressive. YouTube, 2.5% upside. That was in part driven by some of the election spending, so don't read too much in that. But overall, I put this in general, my money's on that this is an overreaction, what we're seeing here. And then one final piece, Melissa, as Dan was kind of doing some of the setup here, talking about the derivatives relative to this, and the concept that we're shifting to a software-focused AI trade. And I understand that concept around that, but I think there is much more room left for these hardware companies to grow. Again, of course, the 47% increase in CapEx that Google talked about tonight. They got to run the table. Amazon needs to say something positive about CapEx. If they say something negative, then all bets off. But my suspicion is that they're going to also be spending like drunken sailors. And I think that this AI hardware trade still has another year or 2 years left in it.
I know those are real issues, but FX and the leap year thing really sound like lame excuses. I mean, Google's got a calendar. We know that, so they know that leap year is not. Anyway,
I agree. It's weak.
Right, it's kind of weak. Putting that aside, though, in terms of the CapEx spend, as an investor, are you confident that additional spend, there's going to be a return on that? I mean, I think that is a critical issue here. A ramp of 47%, that's major. And what are we getting out of it?
Yeah, it's major. Just some quick context to that. They generated this year $72 billion in cash. They've got $97 billion in cash. They're talking about taking their CapEx from $51 billion to $75 billion. They've got plenty of money to spend, and I understand the concept of wanting to see a return on this, but they've got the money to invest. And then, how do we see this forward? And unfortunately, I can't put a stake in the ground and say that all of this is going to have this incredible outcome. I believe it will for all the virtues around AI, but that's going to be a question that's going to be nagging. I would say that where are they spending that more specifically on the infrastructure? Sundar said that this year is going to be the most innovative year in search. Every year should be incrementally more innovative, of course. But I think that speaks to still this underlying question is the Google search results is still pretty junky. It's pretty messy. It's not as clean as Perplexity by any measure or GPT. And I think they need to really overhaul that in the next year, 2 years, while not really jeopardizing the golden goose around their search business. They still got to thread the needle here, still feel confident they can do it, but there's a big task ahead of them.
Gene, it's Karen. Thanks so much for being on. Just to clarify something for you, were you saying they were not capacity constrained in Q4, but would be in Q1?
What I was saying was that just there was no capacity issues there in Q1. There's just variability in saying that. I guess that is a form of capacity is that they just don't have some of the data centers up and running. So yes, I guess that is a form of in an indirect way saying that they're capacity constrained. She did not explicitly say that they got too much demand, but she said that based on availability of hardware, when these data centers are up and running, is going to have an impact. And that's understandable, but I don't think investors are going to really like that tomorrow. Again, I think this is an overreaction. I think the stock should be flattish on these results versus down 8%.
Google cements itself as an active participant in the AI revolution by striking yet another massive deal with Nvidia and promising more funds. This comes after they threw a curveball that suggests that the doomed narrative surrounding Nvidia might be more nuanced than it initially seems. Nvidia is nearing an important earnings day, and everyone is anxious about the demand regarding Blackwell. how China will respond, considering what DeepSeek did the first time, and if Nvidia will exceed expectations at the end of the day. Welcome back, everyone, to Investocracy.
Brace for results from mega cap tech, and the Nasdaq rebounds from its worst week since April. Alphabet kicks things off tomorrow after the bell. Joining me here at Post 9 is Alphabet shareholder Doug Clinton of Deepwater Asset Management. Doug, good to see you.
Good to see you, Mike.
So we had this crack in the Nasdaq 100 and all the related names. And in retrospect, everyone could say, wow, they really were crowded. They really did dominate the market oxygen for a long period of time. This was an important reset. I guess, what do you do right now? Has there been a more fundamental rethink of what's behind these names or not?
We're sticking with tech, to make it clear and simple. I think the reality is this. If you look at what's happening now in the AI era and you compare it to the dot-com era, popular comparison, but I think it's apt. During that dot-com era, 94 to 2000, we had 11 corrections of 10% or more in the Nasdaq. And so as we think about this technologically driven boom that we're in right now, 5% shift really over the last 2 years, 18 months, let's call it, since AI broke out, is not that much to speak of in that context. And we still think the AI thing is just getting started. So these pieces and these corrections along the way are just part of the puzzle.
Starting to hear a little more chatter questioning just exactly how long the CapEx boom in AI is going to last. Obviously, it's well-financed. It's by the biggest companies in the world. They have tons of cash to spend. I mean, this is very solid as a source of demand. But the question is, if you start to see maybe not as quick a payoff monetization of a lot of these initiatives, do they just dial back?
We don't think they will. And I mean, I think that's going to be one of the prime topics as we think about Q2 earnings is what do all the mega cap tech companies say about their CapEx plans? That was the highlight, I think, last quarter, really.
Yeah.
They were more aggressive than people realize. And I think we're going to see that same messaging. And the reality is, if you think about AI and the mega caps, they sort of have to invest. They can't stop. Mm-hmm. We think of it as sort of this Pascalian wager, right? Believe in God, don't believe in God. If you don't believe in God, you're destined to purgatory. And if these companies don't invest in AI and their competitors get it right, they're in purgatory because they're no longer a mega cap company.
Analyzing Nvidia's trajectory paints a detailed picture. Its anticipation for fiscal 2025 is ambitious, projecting a staggering $128.6 billion in total revenue, a 112% leap from the preceding year. But what about the future? According to a consensus of Wall Street forecasts, Yahoo punctuates this with optimism. The fiscal 2026 narrative could be one of record-breaking numbers, with potential revenue touching $196 billion. The linchpin of such expectations hinges on Nvidia's continued dominance in AI hardware, particularly its data center GPUs, which account for a significant chunk of its revenue. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
You mentioned last time CapEx plans last quarter were higher than expected, and the market rewarded them for the most part for it. Does that dynamic continue at this point?
I don't know that they'll reward these companies. I think it's to be expected, though. Yeah. And I think where it may play out is when we think about these hardware companies, and they've seen some of the most severe correction the last couple of weeks here. I think we may get some renewed interest in those companies because they're still the prime beneficiaries of this CapEx spend.
Where does that bring you with regard to Alphabet at this point? It has been, a little bit more of the slow and steady to some degree, I guess, recently.
It has been. It's been maybe quietly one of the better performers of the Mag 7 group this year. It's still our favorite mega cap tech name, period. And I think if we think about two things, one is valuation. It trades at the cheapest multiple of the entire Mag 7 group. Right? And we also think on top of that, they trade at this cheap multiple, but they have the best story, I think, around who could really win big in AI. They've got a foundation model that's competitive with Gemini. They've got their own infrastructure, their own compute that they're building with TPUs, and they have huge distribution. I don't think any other company in the Mag 7 group can really say that other than Google.
Do expectations for Google in particular seem like they're reasonable heading in, or is the bar high?
I think they're reasonable. I think that's a good word to use here. I don't think the bar is excessively high, Particularly, you look at, again, the multiple on it. If the multiple were much higher, you look at a multiple like an Nvidia or maybe a Microsoft.
Sure.
I think expectations are a little bit higher there. For Google, I think they're sort of reasonable, and I think the quarter will be fine.
Love to get your thought on CrowdStrike. I know you have owned it in the past. Here it's, a third off its highs, follow through selling today. Where's your stance on it?
It deserves to be a third off its highs.
Yeah.
I think after what happened, that goes without saying. The reality for us is this: it's a great company. I think it's going to take a quarter or two for them to work out what does this look like for the business going forward. I don't know that they're going to lose a lot of customers. They're not going to lose a lot of logos over this, but I think there's going to be a lot of pricing discussions as customers come back to renew and say, hey, take care of us. There was a big problem here, and I think that's going to take some time to work itself out.
Yeah, and for a stock that's, richly valued as it is right now for lots of growth. All right, Doug, good to talk to you.
Adding layers to this intriguing melee, Sundar Pichai, Google's CEO, provided some clarity amidst the fog of speculation. In a recent conference call, Pichai outlined an increasing shift towards inference in AI development over traditional model training. According to Google's projections, with an uptick in computational demands and a whopping $75 billion set aside for infrastructure, most of which will target data center strengthening, the seas may yet be calm for Nvidia's ships. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
When I step back and think about what's going on here, the cloud business, which, as you note, missed a little bit, they're capacity constrained. And really the most important thing, in my view, is that they're executing well in search. You're seeing good monetization within AI overviews. They're continuing to evolve the experience. When we speak to advertisers, they really like a lot of the benefits that they're seeing from generative AI. And so you put it together, you have search, it's healthy. YouTube, I think, has good growth prospects. Cloud at 30% growth remains attractive. And so I think the investments make sense from a longer-term strategic perspective. I think the company remains well-positioned, and I think the stock is attractive at current levels.
That's interesting you say that they're strong in search, because a lot of what we hear from experts right now is that Google search is being made obsolete by AI, that when you do search things, more and more people are just going straight to their AI apps to do searches. So how are they strong there, and why are we seeing so much ad spending going to a business model that's quickly becoming obsolete?
I think the money is going there from advertisers because it drives an attractive return on their investment, and that is why they continue to spend. I think the competitive landscape is fluid. Clearly, there's competition from a variety of both established platforms and the startups. But what we're seeing from Google, similar to the transition to mobile several years ago, is that they have the intellectual property, they have data, they have models, they have the balance sheet to invest, and they're evolving the experience.
As 2025 unfolds, Nvidia stands at the precipice of a potentially grand narrative arc. Despite its stock's recent descent, the foundational demand for its GPUs tells a story of resilience and opportunity. And now, Google's increasing support paints a picture of continuing future success and increase in revenue. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.